You want to do the intro or you want me to do the intro?
Sure, I can do this. I can do one. You can do the next one.
Okay, sounds good.
Hello, everyone, and welcome to the Lending Podcast. We are your hosts. I'm John Burnham. This is Jeff Jones.
Hello.
And we are excited to bring our first episode of the Lending Podcast to you today. And there's a lot going on right now.
Episode 1.
Episode
Welcome
1.
to the journey.
That's right.
There is a lot going on. I'd love to chat about it. What we're going to do with this episode is really to explain why we do what we do. And then also where we see this market going in 2024 to really help you gauge just the journey of home ownership and how to buy a house here. So,
that's right.
Without further ado, JB, tell me.
It all began back in the summer of 2001. That's right. So let's see. I'm going on my 23rd year of mortgage lending, and started back in 2001. And a lot of mortgage professionals got in by accident. I had a friend that said, "Hey, you should check out this loan officer thing," and he was doing pretty well. I was actually working at a golf course at the time, aspiring golf professional, which I'm glad I didn't go down that path. Yes, because I'm more of a hacker than a golfer right now. So I became much better loan officer than I think I would have been a pro golfer. And so for the first probably decade of my career was focused a lot on refinances. Obviously, we did some purchase loans, but really in 2011, 2012, my business transitioned and became more focused on my realtor referral partners and our past clients and client database as my database grew. And so now here we are in year 23, and I'm more excited about the industry than ever because there's huge changes. There's a lot of not misinformation necessarily, but just a lot of information. And so how do we navigate through everything that's out there to provide the best value that we can to our referral partners and, of course, our clients, and help them figure out what is the best decision for them, because it is unique for everybody.
Yeah,
everybody's different. And so figuring out what that looks like, right, and really help unpacking those options for a client, that's really what is fulfilling to me. And customizing a mortgage plan. I don't look at myself as a loan officer necessarily. I really look at myself as a home loan strategist, and we're putting that strategy together with our clients and helping our referral partners write the best contracts so you can win deals.
Yeah. No, that's good. That's good. So we met back 5 years ago.
That's right.
And it was through our referral realtor friend who actually lives on my block that he sold me a house on his block. So it's a good neighborhood.
That's right.
But we came in, we relocated here to Austin after I was an executive director for a nonprofit in Buffalo, New York, where we were doing housing. And so back in oh man, I'm going to butcher that, so I'm not going to say a year. But for 5 years, I ran a nonprofit that did housing developments in Buffalo. Shout out to 716 Ministries. And we created a community loan fund to really help the unbankable that couldn't get home loans, because we renovated 25 homes, sold them back to the community. Home ownership, we knew, was just one of the biggest ways for them to get a big uplift in their life and set their families on a path of success and financial freedom. So that's kind of my heart behind all that. Friend told me about you. When we can transition here, I didn't have a job, and I was in between jobs, picked up a quick job doing finance, and my realtor says, JB can work a miracle on you. So he'll get you pre-approved, and we were hurting. So he did a miracle getting us pre-approved. We closed on that deal in 18 days.
Pretty fast, yes.
And we were in a home immediately. And so that was a huge godsend for me. And that's how we met. And then when I changed to this field 4 years ago, a year after moving here, you were like, "Oh, you got a license now? Get on my team." And so you kind of recruited me over, and it's been great ever since. So that's a quick hit of how I got into the mortgage industry.
Jeff's been on our team for 4 years and really is a driving force, behind our team's engine, right, that helps service our clients and service our referral partners. And so grateful for what you do on a daily basis.
Yeah.
And that's our hope and our aspiration is to scale and really help way more families. We know we can do more in the community. We know we can help more people, reach more people, and provide clarity and certainty when it comes to the lending process, because there is a lot of fear out there. A lot of folks are just uncertain. Is now the right time? Can I qualify? What about my credit? I don't make enough money. all those objections or concerns, fears that we hear. And I think to sum all that up, what we see a lot of times is buyers tend to disqualify themselves.
Right.
There's a general sense of they disqualify themselves before they ever have that conversation. And I think that's not the right approach. I think the best approach is to get with a mortgage professional, have them dissect your entire financial um, makeup on paper, right, and put a plan together. Maybe it's not the next 6 months. Maybe it's not even in the next year, but in the next year or two, to get a plan so that you can be a homeowner. Certainly, if that's your goal, and we understand homeownership may not be for everybody. I believe everybody can and will be able to qualify at some point if they aspire to. But we understand it's not for everybody, right? There's a lot of renters out there that want to remain renting for various reasons, and we get that. This information is really for those aspiring homeowners and current homeowners who may be looking to sell and buy or invest. And we have so many clients that have a ton of equity that they've built, and how do we leverage that equity and go accumulate more wealth through real estate? And so we hope this information, believe this information will be helpful, and excited to go on this journey with you.
Yeah. So how old were you when you bought your first home?
We bought our first home. We did it backwards. We bought our first home in 2004, and we bought an investment property before we bought a homestead.
No, come
Yes, I know, it's crazy. So
we don't advise that, by the
we
way.
don't advise that, right? So we were renting an apartment. We did not have kids yet. This is 2004, 20 years ago. And we came across an investor that was selling 5 houses in a package. And if any of you know about real estate in South Austin, these houses were all of cumulatively were less than $400,000 for 5 houses.
Oh
So
my
like
gosh.
$80,000 a house. So we couldn't pass it up. We had to beg, borrow, scrape, and get gift money to make it happen because we didn't have the down payment
Sure.
money. And so we were able to close on those 5 houses, which I know is so backwards, and we're able to sell a couple of them immediately to the homeowners that wanted to buy those rental properties. And that parlayed us into building our first home. So we didn't even buy a resale home first. We started with investment properties, and then we built a custom home in 2005. And so our story, it is a little backwards. I can tell you what not to do.
Yeah.
I've got some experience on what not to do, but it really taught me a lot. And I think going through those trenches has prepared me and us to educate and inform our clients how to make better and smart financial decisions. So.
Yeah.
I was embarrassed for a while to admit that, and realized that full transparency is so important. I mean, we all have our faults. We've all made mistakes, right? And so just coming forth and saying, "Hey, I stepped on a landmine. Here's what not to do," and I think it's really helped me build relationships with our clients and our referral partners through that just open book. And so that's
Yeah.
really kind of how I approach my business.
Yeah. We bought our house, first house in 2004 as well. And this was in Redding, California. Shout out to Simpson University.
Is that Northern
alumni.
California, right?
It is Northern California, 2.5 hours north of Sacramento. So it's at the top of the bowl. Gorgeous lakes, Whiskey Town is my favorite place. Really pretty. We used to hike Mount Lassen quite regularly, but it's a really neat town. We were part of a great church there and loved it. And so we ended up 24 years old, and we were on staff at a church, and the pastor goes, "Hey, we want to sell our house to you guys before we put it on the market." This was on a Friday night when we had a staff meeting. He's like, "But we're going to put it on the market on Monday. So if you can get pre-approved and see if you can get a loan, that'd be great."
Over the weekend.
Over the weekend.
We've never heard that before.
So of course the banks turned me down right away. I tried 3 banks. That was a no-go. Didn't hit the mustard. Then I went to a broker, and he's like, "Heck yeah, I can get you a loan." you know? And in '04, it was a 80-10-10.
Right. 2
Um,
loans.
so it was a pretty interesting structure. I can get into that in another time, but basically, I can pay whatever I want. I can pay just interest, less than interest, negative amortization. Can't do that today. But this is before 2008 crash. So we bought that house and then renovated it, sold it back to the pastor because he wanted to buy it back from us to turn it into a rental because I gutted the bathrooms,
Oh, wow.
kitchen. It was nasty. Um, and we sold it back for $90,000 more than we bought it from for 3 years later.
Wow.
And that's how we got debt free, because we had $90,000 in student loans.
Wow.
And so we instantly paid off our student loans, still in our 20s. And that was our first one. And then we bought in Buffalo, sold that one for 60 grand more. Buffalo, New York, shout out. Go Bills. And that's what got us to move here. And we use that money to buy the house we're in now. So for me and my family, home ownership has been our stepping stone to just having that security for family. We got 2 kids now. We want to have a home, build the shelter, and all that safety and all that good stuff. So
And that is the
why I love it.
traditional route to go. And I think that for most of our first time buyers, that is your process.
Yeah.
That's your plan. You're in a home for maybe 3 to 5 years. You can sell it, as many of you know. The gains up to $500,000 on a homestead are tax free. So if you
Right.
buy a house for $400,000, you sell it for $800,000 a
Right.
few years later, that $400,000, that is tax free money. Now, is a house going to double in a few years? Probably not. The traditional real estate appreciation is about 3 to 5%, right?
And here in Austin, that's been accelerated
That's right.
depending on what year you're looking at. The last year was a very different kind of year. But before that, in the last 5 years since we bought our home, we've gained $200,000 in equity, which is crazy. I don't know any other investment that will do that for you.
So let's unpack those numbers. So
Yeah.
when you bought your home, remind me, how much did you put down?
We put down 5%.
5%. And what was the sales price? Just under
$290.
$290. So call it $300,000.
In Buda, Texas. Love Buda.
So you put basically 5% down on, let's say, $300,000. So
Yeah.
$15,000, maybe some closing costs. Let's call it 20 grand.
Yeah.
$20,000 out of pocket. And how many years later is it worth 200,000 more?
It's worth 450.
450. So 150,000, let's say, in equity.
Yeah.
What is the return on that investment? That's 700%. That's 7x.
Yeah.
$20,000 cash investment worth 150,000.
Right.
And that is the cash on cash return we talk about with our clients sometimes. You take 15, 20,000, put it into a home. If it goes up, when it goes up, because the traditional appreciation rate, again, 3 to 5%. So 5% appreciation on a $400,000 house is 20 grand. That's 100% cash on cash return for most of our homeowners in a normal market, let's say. And,
Yeah.
and right now, we know the market in 2022 peaked as far as values. They have come down. But if you compare 2024, where we are, to 2019, pre-pandemic levels, we're up 30 to 40% or more in most cases in appreciation. That's still 8 to 10% on
Right.
average over the last 5 years. And so when's the best time to buy a house? It actually was yesterday, right? And the next best time is today. And that's just because it's a long game. It really is a long game. And we see a lot of clients, and even maybe some real estate professionals, trying to time the market.
Right.
And my financial mentor and one of my business coaches says it's about time in the market, not timing the market. Same with the stock market. If you buy blue chip stocks, good Fortune 100 companies, right, that have good balance sheets, solid business models, over time, those stocks are going to appreciate. They're going to go up and down, but over time, they're going to gain on average 8 to 9%, right, in the S&P.
Well, you and I both do the cost of waiting scenarios for people that are
That's right.
wondering if this is a good time to buy. Have you ever seen one where it wasn't a good time?
I really haven't. I mean, the only time I could argue that is perhaps we have a buyer who's paying crazy low rent with really no risk
Right.
of losing that
Yeah.
scenario. Because even our clients that are paying low rent, you've got rising property taxes in Austin and everywhere. You've got rising insurance costs, which makes the home ownership more expensive for the landlord. And so eventually that landlord's going to come and knock in and say, we got to raise the rent. We got to raise the rent. And so
Right.
what is that stair step in rent increase, and how do you weigh that against the home ownership? I still think from an equity building standpoint, there's never a scenario where you shouldn't buy. Like,
Right.
that's a double negative. There's always the case to buy, right, because of the equity build. But sure, there's probably some scenarios where it might make sense depending on your income, depending on your rental costs, and depending on your housing scenario, where you could argue, yeah, it makes more sense to just stay put. I think it's the minority case, though.
And I think that's the big deal is find out if you're not a homeowner now, find out from somebody that is a specialist in the industry that knows what they're talking about and have them run a scenario if this is the right time for you to buy. Because you might be wondering that. I used to wonder that.
Absolutely.
And I was like, should we wait to buy? Should we rent for a little bit, especially when we moved here again? And the reality is, no, it's still a good time to buy, especially right now in our market where you can get a really good, if you're working with a great real estate agent, which I hope you are, you're going to be able to get some wiggle room on that purchase price.
There's definitely value in the
Yeah,
marketplace right now. And as we get ramped up in 2024, we're already seeing increased activity. We're already seeing multiple offers. We've had
right.
two clients, really three. One of them got beat out by cash, but two of our clients in multiple offers with other financed offers. And it's early February, mid February of
So the
2024.
bidding is
So
happening again.
the bidding is happening.
Hmm.
Now, is it to the same activity level that we saw a few years ago? Not yet. And will it get back to that? We're not really sure. I think a lot of that's driven by so many market factors. The job consistency here in Austin is really strong. We've got a really strong labor
Yeah,
market, and we're watching interest rates and we're watching house prices and all those things. But the sheer population growth is continuing to build on that strong demand.
yeah.
And therefore, prices will continue to grow. Will they grow at the same pace they were 4 or 5 years ago? Probably not. They've decelerated, but they're still increasing.
Good. So, so 2024, I think this is going to be a very unusual year, what people have been experiencing in the past. We've had a lot of movement on rates going way up and down, a lot of fluctuation. We had some news yesterday from Powell. But where do you see 2024 overall going in real estate?
So interest rates are going to drive a lot of that, and that because that's the headline news, right? Yes, we're watching prices, but I think most homeowners, aspiring homeowners, real estate professionals, we're watching the interest rate market, and the rates, as you may already know, but the rates are corresponding to what's going on in the bond market.
Yeah,
So mortgage-backed securities, mortgage bonds, drive interest rates, and bonds really move up and down with inflation more than they move based on the Fed movement. So, not to get too much down that rabbit hole, because that's probably a whole nother episode, right? To take a deeper dive in rates, which we will do for sure. But we're seeing right now rates really stabilize.
yeah,
So they peaked in October of 2023. That was the highest they've been in over a decade. And then a really sharp decline from October of 23 to basically January last month of 2024. And that total rate decrease was about a point and a half in interest rate.
it's huge.
So if you think about it, it's a huge drop because of, let's say, a $400,000 house. A point and a half in interest rate is about $500 a month
It's
to a
real
home
money.
buyer's payment.
Yeah,
That's real. That's a car payment, right?
yeah,
$50 a month. Okay, that's not really moving the needle, but $500 a month moves
yeah,
the needle. So now we've seen this leveling off. And what I like about the leveling off in the market is it's giving more clarity to our home buyers and our agents out there because there's just more consistency with the rate quotes. When rates were super volatile, we'd
right.
see quotes in the sevens and we'd see rates in the fives, and then it's confusing our home buyers out there,
100%.
right? And lenders were all over the board on rates. So
Yeah.
where I see it going for 2024 is the next couple of quarters, Q1, Q2 of this year, we're going to see more stability. I don't see rates dropping significantly.
Yeah.
Okay, so that begs the question: should I wait and see what rates do? Well, let's unpack that because as a home buyer out there, if you're thinking about waiting, so is the next person right next to you. And if they're thinking about waiting, as soon as the headline reads that rates went down, now we've got increased activity, increased demand, and we've got bidding wars again. We've got multiple offers again. So the best time, really, like we said jokingly, but it really is true, the best time to buy a house was yesterday because the competition's lower right now. And when you can put an offer in and get it accepted, perhaps have the seller pay some closing costs, then you're getting value in that purchase. If rates go down, everyone else is jumping back into the market. You've already bought your house. And now you're going through the refinance process potentially to lower that payment, lower that interest rate, and you've already got your home versus competing with the next 100 buyers I mean, I remember in 2020 we were hearing stories of
Whew.
100 offers on one house in Round Rock.
Yeah,
I don't know that we're going to get there
that was
again, right?
wild.
That was wild. But so the back half of the year is really slated. All the economic forecasts are lower rates. And so if we're waiting till the back half of this year, Q3 or Q4, that is when a lot of buyers will be re-entering the market or entering
Hmm.
for the first time. And competition will go up. So um, interest rates should be stable for the next foreseeable future, let's say 2, 3, 4 months. As the Fed evaluates the economy, they are very data driven. So they're looking at jobs, they're looking at inflation, they're looking at all those factors that will help them decide if they're going to lower or if they're going to continue to keep rates the same. And right now, there's really not a lot of reasons for the Fed to cut, and they're saying as much, right? So if the Fed's not going to cut rates, and that's the short term rate, right, the overnight lending rate, that affects home equity loans, that affects car loans, that affects credit card interest rates, that affects the prime rate, construction loans. It doesn't really necessarily affect mortgage rates, in tandem,
But it sets the tone.
but it sets the tone
Yeah,
for sure. And that
yeah.
headline is what we're watching. A lot of buyers and agents are watching. So it'll be an interesting year because of the pent up demand. And the article that we just read about Austin has the highest pent up demand of any city in the country, based on how many buyers are on the sidelines. So
Yeah. No, I think that's really good. You know, one of the factors that a lot of people look at is like location is a big deal for buying a home. You know, I want my kids in good schools, or hey, I want to be in the middle of the city where the action is, or hey, I want to be out in the mountains where the wineries are. Whatever your decision making is,
right,
like location is key, but like monthly payment, cash to close, those are huge. My wife wants location. I want monthly payment, cash to close. You know, so we have very different kind of ways of measuring is this a good time to buy. And you know, as loan officers, our job is to really provide scenarios, right,
that's
that
right.
fits what you're looking for. And I do think it's a great time to buy for that person that's a first time home buyer and they want to start getting that equity growth, get to financial freedom. They don't want a landlord. They want to be their own. They want to be their own landlord, and every monthly payment goes towards something they own, right? And it will appreciate and go up.
That's
So
right.
that is huge for first-time home buyers. What I'm curious about is what 2024 will hold for those kind of what we call move-up buyers, people that are owning their home now, don't want to trade in a 3% for a 6.5% rate or seven.
And we hear that a lot.
You know, and that is creating a compression of supply, right? So you have all these people that are sitting on their current homes because they don't want to trade in their monthly cost. And I think that as this year goes on, that pent up demand is getting stronger and stronger because people have been sitting for
No question.
over a year.
And perhaps they're outgrowing their home or
Right.
they're ready to right size. So I will play devil's advocate here on selling your home at 3% interest rate and buying a house at say 6.5. So two things are going to happen there. Number one, selling your home with a lot of equity, you can parlay that equity
So
into the
you
next
might
home.
even be reducing your loan amount.
Absolutely. And or paying off debt. Maybe it's a car payment, maybe it's some credit card debt, some student loan debt, whatever it is individual to your scenario. And then that appreciation rate, let's do some quick math. If homes are appreciating at 5%,
Right.
5% on a $400,000 house is 20,000 a year. 5% on an $800,000 house is 40 grand a year. So you're compounding your
Yeah.
wealth through the purchase of a higher price home. Now, what does that monthly payment look like? Perhaps it goes up a little bit, but here's the key. Your interest payment is also going up. Your interest payment and your taxes, let's say, are going up, also creating a larger tax deduction that your tax professional could run some numbers and say, is that higher interest deduction and higher property tax payment bringing your taxable income down where you get a $10,000 or $15,000 tax
Yeah.
refund, and then you parlay that against what you're paying, and maybe it's not costing you as much on a monthly basis as you think. So there's really a lot of numbers to crunch,
There
and
is.
that comes back to don't disqualify yourself, right? If you're a real estate professional, encourage your clients to have the conversation. If you're a home buyer, don't disqualify yourself, have the conversation because there are a lot of numbers to look at other than just what's the interest rate.
And I think that's key. That's wonderful you said it the way you did, because I think looking at numbers, looking at scenario A, B, C, things side by side, when you're comparing, apples to oranges, you kind of need to see them visually. And I'm a visual learner. I think, I want to see the breakdown. And unless you're getting that from a loan specialist, you're not getting a complete picture.
That's right.
And so I think that it's critical that people use people that are in our industry to get those scenarios for you, not somebody that's not in the industry. And I think that's key, is because we have the pulse of what's real. When we send you numbers, we have all kinds of guidance and like checks and balances behind those metrics. So when we give you good information, it's good information,
right?
And sometimes you need a variety. And so I think that when you have over 300 products like we have here at Benchmark, we want to look at what scenario is going to fit you best.
That's
and
right.
Give you different scenarios, not just one. And we'll recommend and we'll talk through and sit down. And so I think that people don't realize, like, there's more ways, to cut that cookie
so
or that pie.
Yes.
I'm going to butcher that.
You have to look at it holistically.
You got to look at it whole, and you got to look at the different kinds of programs, right?
Yes, and not just what's the payment, or what's the interest rate. And an example that comes to mind is a client that we just helped that had $80,000 in credit card debt, and we were able to help them consolidate that.
Yeah.
The average interest rate was almost 30%. They were paying close to $1,500 a month in interest payments. So if you go from 3% on a mortgage to 6% on a mortgage, but you wipe out $80,000 and $1,500 a month in interest payments that are not tax deductible, what does that really do for your financial situation, and turning that interest payment into a tax deduction? Because we all have those standard IRS tax deductions. And if you're under the standard deduction, your interest payments on your home are not necessarily helping you. And so you've got to get above that standard deduction to reap the benefit of the IRS tax code, right, where you get more of a tax refund. So those are all things. We're not CPAs, but we work in conjunction with those tax professionals, right, to make sure that you're getting all the information for your scenario.
So 2024 is a good time to buy.
It is.
Yesterday was a good time to buy.
Yes, it was.
Today is a good time to buy.
That's right.
I love that.
Second best time.
Well, that's good. I think we're about to close this one out. Any kind of final words?
What I would say is we're here to support you. We're here to support you wherever you are. If you want to talk about your credit scenario, if you want to talk about your income scenario, if you want to talk about anything related to selling, buying, renting, there's so many scenarios out there that we've seen. And collectively, between Jeff and myself, have closed over 4,000 loans. Said differently,
that's a few.
We've helped over 4,000 families with their financing. So it's a big number. It's something we're super proud of. Right. And we thank you, our clients, our real estate partners who have supported us. We want to continue to bring the best value, the best information that we can to help you make good decisions.
Wonderful. Well, thanks for joining us at the Lending Podcast. Please subscribe, and we'd love to continue to see you each week.
Take care. See you soon.
Take care.